and welcome to Chapter 6, Learning Objective 3, Explain Petty Cash in the Change Fund. Petty Cash Fund is an account dedicated to paying small day-to-day expenses recorded in an auxiliary ledger record, later summarized, journalized, and posted. Asset account, normal debit balance, custodian oversees the fund. So a petty cash, in case you have never dealt with a petty cash fund, I have a petty cash fund, which just includes collecting quarters for when people need stamps. You know, everybody pays me 50 cents. It used to be, if you need dry cleaning, if you need to pay for parking out on the parking lot, you need to buy a candy bar from the vending machine. Nowadays, all that's done by credit card, so there's really not a ton of need for petty cash. I mean, maybe some of you may have like a petty cash fund that's $500 and you pay for employees' lunches, or I don't know, maybe there are some old vending machines out, but usually there's like a little black box that one person is in charge of, this black box that has some real cash in it. They have it locked and secured. They have numbered vouchers so that when somebody requests petty cash, they have to fill it out. They're sequentially numbered to have that control over it. And at any one time, if your petty cash fund was $100, you should have that amount in cash plus voucher should equal that $100 at any point in time. Okay, so setting up a petty cash fund, it's a new asset, so it's just like an additional cash account called petty cash. It's created by writing a check and reducing the asset in cash. So you're really just transferring the money from your cash account into your petty cash. So you're increasing your petty cash account by debit and just writing a check out of your cash account, moving it into petty cash. Okay, petty cash account is debited or credited if the size of the fund is changed. Vouchers are used when money is removed from the fund. One of the internal controls is that they are sequentially numbered. It's filled out each time a payment is made, and it's usually signed by both the person taking the cash and the custodian. Vouchers are sequentially numbered, as I said, and the voucher plus cash on hand should equal the original petty cash balance. Petty cash vouchers contain the voucher number, which would be in sequence, the date, to whom the payment was made, the amount of the payment, the reason for the payment, the signature of the person approving, the signature of the person receiving, and the account to which the item will be charged. Here's a quick example of a petty cash voucher. At the end of May, the following items are documented by vouchers. So you got all those vouchers. So now you got to do journal entries for all those vouchers to replenish your petty cash fund. Okay, so first we recorded in our auxiliary petty cash record. So you have the establishment of your account, $60 cash received. Then you have, you record all the different vouchers, so first aid, postage, cleaning, all the different payments that have made out of that petty cash box. And then you have columns specifically designed for postage, because that's the most common one you're usually using for, or a delivery expense. And then things that aren't covered by postage or delivery, you write a description here, and then you total all your columns, and all your columns should equal your $60. Or actually, I said that wrong. All your columns, your postage, delivery, and sundry should equal your payments. Okay? Now your payments technically should equal your receipts, your $60 cash. Or you should have $54 and then you should have $6 cash left in your account. Or otherwise you have a cash shortage or overage. Okay, so no postings are done from the auxiliary record. The compiled information is used as the basis for the formal journal entry. A check is issued for the expense total in cash. The cash is replaced in the petty cash. Debits are a summary of the total expenses. Okay, so this was your journal entry to establish the petty cash fund, debit petty cash, credit cash. Now, we're taking the totals from that auxiliary record, and we're, you could really do it for each individual item too, but since we have that auxiliary record, we're just going to take our summaries and book those expenses and credit cash, $54. Okay, so then you have your ending balance was cash, your replenishment's $54, and your new balance is $60 again. So we're all in balance. So which transactions involve petty cash and how to record them? So the establishment of a petty cash requires a journal entry and also goes in the auxiliary petty cash record. Paid salaries, that's not going to be out of petty cash. That's just out of regular cash, right? It's too great for petty cash. For Band-Aids, prepare a voucher, record in the petty cash. For postage, prepare a voucher, record in the petty cash. Pay light bill, that a new check would be written. Replenishment of petty cash, you debit the individual expenses and credit cash. Okay, now for a change fund. A change fund is made up of various denominations. So this is like at McDonald's when you have your drawer, or at the movie theater you have your drawer and you have so many quarters, so many dimes, so many ones, so many 20s. Okay, the fund is placed in the cash register drawer and used to make changes for customers who pay cash. So instead of petty cash, we're making a change fund where we have all this. So we're debiting change fund, a cash account again, and we would have had to write a check to cash to get money for this change fund. Okay, now, you know those people at McDonald's and the movie theater make errors with the change and giving you the wrong change back, so they must record overages and shortages. A shortage is considered as a miscellaneous expense. An overage is considered as other income. So you have, this is your T account, a cash, shortage, and overage. You debit if there's a shortage. You credit if there's an overage. Okay, so on December 5th, a pizza shop rang up sales of $560 for the day, but only had $530 in cash. So we had a shortage, right? So we have to record an expense. And basically, you just want your debits and your credits equal. So if you had a sale of $560 and you only got $530 in your drawer, then you're short. So you have to record an expense. Okay, what if a pizza shop rang up sales of $560 but only had $610 in cash? Then we have an overage because we collected too much money, so we have an additional income. So cash short overage would go to your miscellaneous income account. Okay, now you can have cash shortages and overages in petty cash as well. So if all your vouchers don't add up, your vouchers and your cash in the box, if you have $32 in coin and currency, $160 in vouchers, that's what, $192. And you need to add up to $200. So we're $8 short. Okay, so we record our postage, our supplies expense, and then we do our expense for being short to get our total amount we need to replenish petty cash. If we had 32 in coin, the difference between 200 and 32 is our 168 that we have to replenish petty cash. Okay, in the case of an overage, the cash short over would be a credit as other income. Okay, and there's no example of that, but then your cash shortage overage would be over here if you had an overage in fact. Okay, so make sure you study this. This will be on the test, a petty cash exercise using the auxiliary record and having to record, your shortages and overages. Okay, study hard.